The Federal Reserve has lowered interest rates to historically low levels. However, interest rates are no longer the main concern of the Federal Reserve. The Federal Reserve has announced it's going to be very active in buying assets, in particular agency securities, treasury bonds. In theory, whenever the Federal Reserve buys something, be that a typewriter, be that a car, or government bonds, it's stimulative to the economy. So a 0% interest environment is not a limit for the Federal Reserve. Everybody cheers that for now because it lowers the cost of borrowing. It lowers the cost of borrowing for homeowners. Having said that, it only lowers the cost of borrowing for homeowners if you qualify for a loan. So those who probably don't need low interest rates in the first place can now afford to buy a house at a lower price. The other ones remain shut from the markets. But there is a far more challenging environment ahead of us, and that is the flip side of all this. If you push up the prices of securities, lower the yield, what happens is that other private participants may not want to participate. The Federal Reserve has shown that when it, for example, went on to help General Electric in the commercial paper program. General Electric stayed afloat with the Federal Reserve stepping in, but the credit markets remained seized up. That's because the Federal Reserve artificially lowered the price of the commercial paper. The same thing is happening with any other program the Federal Reserve is engaged in. Rather than kickstarting economic growth, the Federal Reserve is becoming the backstop of all economic activity, and the Federal Reserve is substituting anything and everything happening in the private sector. And while the Federal Reserve has the printing press to print as much money as they want to, they don't have the staff member to serve all the acronyms that they have created. And there's an even bigger challenge. Typically, the buyers of debt securities, of US government debt, have been foreign governments. Well, just as any private person may not want to buy something that's artificially inflated a price, the same thing applies to foreign governments. Foreign governments may simply abstain from buying debt securities the US is issuing, also because they may need that money at home. And so that's why you're seeing this very drastic movement in the currency market that fall in the dollar, because there might just not be the foreign demand for the US dollar anymore. Also note that the weaker dollar is very much pushing inflation, and that may be what the Federal Reserve wants in this environment. If you don't want housing prices to come down, the second best thing you can hope for is that the prices of everything else goes up. And that's what you do by pushing down the dollar. You're asking for inflation. Just be careful, you may be getting more than you're bargaining for.